Hello, friends. How you doing this morning? So I was given a subscriber question that I want to kind of use for this video. But before I do that, I just want to remind you that if you're new to this channel, one of the things that I do that is unique is I have a portion called subscriber questions. And again, I'm a one-man show. So all you have to do is take any of the videos on this channel, leave a comment, and basically with your question. So for example, I got a comment yesterday on one of my newer videos that said, hey, can you do me a favor and do a video about what would happen if interest rates spiked in the future, right? Basically the idea is we are at near historic lows, and some of the financing being got today is actually in the fours if it's residential, and maybe even go lower as it looks like the trade war is kicking off, and there's a lot of talk about rates even going lower. So the question was basically, okay, be a voice of reason for us, and let's talk about what would happen if interest rates went up. So I thought I would tackle that. But again, what I want to communicate here at the opening is, if you're a subscriber to my channel, one rental at a time, all you have to do is leave a real estate question in any of my videos. And generally speaking, I will, assuming it's a question I can answer, because that's something you'll see, is if it's a question I have no expertise on, I'll just tell you in the reply, sorry, can't help. But I'll take a shot at doing this. So for the subscriber question, what would happen if interest rates went, let's say, from 5% today to, let's go up 50%. Let's go up to 7.5%, 30-year money, fixed 30-year money on residential loans. And let's say that's 5 to 7 years from now. All right, what would generally happen? Well, first off, we're going to answer this question by talking about residential, which means residential financing, which is the kind of 1 to 4s. And then I'll take a stab at commercial as well, because I think interest rates, a rise of 50% could be particularly damaging to one of those areas. So, all right, so here it goes. So what happens if interest rates go up from, say, 5% today to 7.5% in 5 to 7 years? Well, the first thing you need to answer, which is always hard in these kind of time-lapse scenarios, is it a gradual increase, or is it kind of what we experienced late last year with that quick 1/2 or 3/4 of a point rise, within, I think it was within 4 or 5 weeks. So if it's gradual, meaning it just upticks slowly between now and, what would that be, 2024, 2025? It's going to have some impact, because most residential purchases are bought on mortgage payment. And, at some point, assuming wage inflation doesn't keep up, you are going to price people out. So what will happen in a gradual environment is inventory will build slowly. Inventory above the median for the area will start having less attention and all of that. And the other thing you got to remember is you have to ask why interest rates are rising, right? If they're rising gradually, it means that there's no big scary wolf out there, right? It means inflation isn't taking off, right? If inflation was taking off and the Fed got nervous, they would raise rates, overnight. And, that would be a shock, which we'll talk about in a second. But again, if interest rates generally rise slowly, probably means employment has stayed strong. It means, we're manufacturing and building stuff. There's some inflation in the system, but it's not too bad. Again, reported inflation, I think inflation, generally speaking, is worse than what's reported, but that's a topic for a different video. So at the end, I think what happens in a general or rising, interest rate going from 5 to 7.5% over 5, 6, 7 years, is you have a little bit slower home purchases. Again, it will affect the owner-occupant market for sure. The rental market, right, given investment options, probably doesn't have too much of an impact, right? You might get a little price sensitivity, but generally speaking, in that environment, rents will be going up, and when rents go up, you can afford more. So I don't see a general increase in a slow trick up in inflation or interest rates being a huge hit to the market. If you flip that over in residential and say there's a huge shock, right? We go from 5% to 7.5% in 90 days. That will cause problems, right? The owner occupant market would basically stall, in my opinion, right? Because mortgage payments, again, what I said earlier, is why people buy owner occupant stuff. And as an investor, especially in residential stuff, you need to pay attention to the owner occupant market. They're a huge disproportionate part of single family homes and residential purchases. So when they catch a cold, it impacts the market like it has pneumonia, right? So if the owner occupant market is suddenly price sensitive and interest rates went from 5 to 7.5% in 90 days, new home sales would collapse, existing home sales would collapse, listings would stay on the market much, much longer, price drops would be prevalent. Cash buyers would be increasing their discounts because there'd be no buyers, right? Basically, if interest rates went from 5 to 7.5 in 90 days, buyers would disappear. That's what would happen. And when buyers disappear, the lag of that is prices and values will come down, because again, it's all about mortgage payment, or at least for most people, it is about mortgage payments. So if the buyers disappear and it lasts for 90 days or 6 months, you're going to see a reduction in prices. And again, this scenario is prices or interest rates go from 5 to 7.5% in 90 days for residential. I think that has an impact on home values. I don't think it's the likely scenario. I don't think there's a big bad boogeyman out there that's going to cause that to happen, but it's absolutely in the realm of possibilities, right? I can't see the future. I don't know what's going to go on with this tariff things. I don't know what's going to go on with the next presidential election. I don't know, right? So I don't think it's likely, but it is possible, right? So generally speaking, just to sum up residential, if interest rates go from 5 to 7.5%, it's all about the speed of the rise. If it's gradual, if it's over time, I think that means the economy is still humming along. I think there's some inflation. I think there's some rent growth. So I don't see a huge impact. If it's rapid, sudden, unexpected, you are going to see inventory grow and you're going to see prices fall. That's what I would call, right? Goes from 5 to 7.5% in under 90 days. I think that's the likely outcome. So let's flip the script a little bit. Let's talk about commercial. Because again, some things, people talk about real estate investing like it's all the same. And trust me, it's not all the same. It's not all the same from an owner. It's not all the same from a lender. It's just not. So first off, let's talk about commercial financing. So first off, commercial financing is not really controlled by agencies, right? FHA and all of that, because it's just not. So today, a good interest rate on a commercial loan is, has a 5 on it, where residential could have a 4. There may be some exceptions. If you're big, you might be able to get something lower than that. But the other thing you're going to see in most commercial loans, and this is what's going to surprise this market, is there are resets. They're not, typically speaking, 30-year fixed loans. Maybe they're out there. I've never seen one. I did see a 20-year fixed the other day, but I've not seen a 30-year fixed like residential. In fact, most of my existing commercial financing has either a 5 or 7-year fixed period, and then it goes variable. Why is this important? Well, if you're buying a commercial property and you have a, let's say, 5-year cliff, which means it stays fixed, let's just use 6%, and then the environment changes, and where residential was 7.5, maybe 8, maybe commercial is 8.5 or 9, you're going to have a wake-up call when interest rates reset. And sure, there'll be caps on it, mins and maxes and all of that. But I think people are missing the boat in the commercial market. And what I hear a lot is, we're taking this value add property, we are going to raise rents and add some capital, and we're going to sell it in 5 to 7 years. But here's the rub. If you're selling an asset into a market where interest rates have gone up, cap rates have to go up. Cap rates today, people are paying 4s, some markets 3s. So if interest rates go up and then cap rates have to go from 3 or 4 to 6 or 7, or heaven forbid 8, mean, I don't know if you're thinking about this, but your price has got to come down, right? And it's got to come down substantially. So yeah, some of that will be offset by rent increases. Don't blow up my comment section. Yes, I get it, right? Maybe you raise rents $100 a door or $150 a door. So maybe it absorbs some of that, but run your numbers, right? If you're going from a 4 cap to an 8 cap, even with rent increases, my guess is your price has to come down, or at least your expected price, right? Your sale. That's what I think some, limited partners are missing, right? They're rushing into syndications because they're seeing past performance, right? The time to get into syndications was probably 4 or 5 years ago, right? It was 2014, 15 when you had depressed assets, you had really low rents, and you had some forced sellers from the last crash. Now is probably not the best time. When you get cap rates in the 4, folks, come on, really? 4? And if you really put on your thinking cap and think what happens if cap rates go to 7 in 5 to 7 years, I think you're going to see that the rosy picture of your exit is not so rosy, right? Don't assume you're going to sell at a 4 cap in the future. That's the big mistake I think people are making. Because if interest rates rise in the commercial market, cap rates will have to rise, or they'll just keep money in the bank. That's, risk-free investment, right? So that's what I think a lot of people are missing, is they're assuming the cap rate will stay the same in 5 to 7 years. And if interest rates go up substantially, don't bet on that. Cap rates will rise in my experience. So again, I want to thank the subscriber for this question. It was fun to think about overnight. If you are a subscriber and you have questions, why not leave a comment below and ask a question? And if it is something I can answer, I will likely create a video for you. So hope that makes sense. If you think any of things I have said about the interest rates, going up are different, leave a comment. I'd love to hear what you think. I'd love to hear where I'm wrong, and let me know what you think the chances are of interest rates going from 5 to 7.5%. All right, everybody, have a great day. Thanks.